Hi, Tim Bigham for Delta Derivatives, option hedges and edges, powered by the best option scanning tools on the market today, rbtrader.com. And we're waiting for some power to come out of either Bank of Japan or the Fed, as both are having two-day meetings here. Arguably, Bank of Japan with a little more important monetary policy decision. Certainly the Fed, it's been tooled way down as far as a rate hike. Really, I think last I looked, we're about 20% odds here, but given the weak economic growth and some of the chatter out of the Fed governors, doesn't look like a rate hike here. Personal opinion, I don't think they hike anytime soon. Probably some hawkish talk to try to temper what may be a rally in the market, although I think we'll be back up in that trading range, 214 on the SPY, 221 at the all-time highs, kind of chopping around there. We spent 40 straight days in there before we finally broke out to the downside on some fairly hawkish Fed talk. It seemed like, just yesterday, but that was, a week and a half ago. So I think we'll be mired in this kind of trading range ad nauseum. Valuations kind of putting a lid on things. Cheap money putting a floor on it. This kind of yin and yang back here. And speaking of kind of cheap money, looking at Apple, which got right up to a 2% yield at that 116 and change level after a monster rally on some iPhone sales that now are being kind of say, hey, they're a little inflated because of the discounts given. They'll probably pull from the third quarter in some of the sales here. So Apple got up to that 116 level, sold off sharply yesterday, kind of like that key reversal kind of day. So I'm selling call spreads on Apple, looking out to the traditional Octobers, the 120, 123 call spread, collecting about 35 cents on that. So really looking for Apple not to, break out convincingly to the upside. There's some also big time resistance at 120, and using those option scanners, taking a shot in essence on Starbucks here. Stock has been nothing but straight down, but we've seen big time call volume coming in over the past week and a half. Big call volume yesterday. We finally saw the stock firm up a little bit, so that 53 level, big time support, bounced off of there with that big call volume coming in. I jumped in, joined along with them. The implied vol on these, even with the big drop in Starbucks, is down about 15% over the past month or so. Implied vol is still at the low levels here, so I just simply bought the October 53 calls, looking for Starbucks maybe to get a counter trend rally, a bounce off that 53 support level. We'll see what happens there, but certainly defined risk trade. And then going forward, I still favor kind of selling out of the money call spreads as a trade structure here. Given the VIX is still around that 15 level, if we drop below, certainly 12 on the VIX, I may abandon that simply because the premiums might get a little bit too light. But up around here, I think we'll be just trapped in the trading range. That's kind of the mantra going forward. So until next time, as always, here's the good trading. Take care.